Hello everyone, my name is always Asmal. Welcome to another episode of Tooways to Skin a Cat, powered by Makosi, a show where we talk career experiences, entrepreneurship and investments. The main aim is to show that there's more than one way to be successful other than just climbing the corporate ladder. We are live on LinkedIn and YouTube, and a reminder that the show will be available on podcast by tomorrow morning. If you are joining us live, please drop a 1 in the comments so that we know we're not talking to ourselves, and drop a 2 in the comments if you're watching it on the recording. My guest for this week is Pravarshan Murugasen, chartered accountant, chartered financial analyst, MBA, and head of equities at Foord Asset Management. I tripped my tongue there. It's a very long title. Pravarshan, thanks so much for joining me.
Thanks, Wes. And not just all the qualifications, the name's pretty long as well.
So let's jump straight into questions. Tell us a little bit about your story. Where do you come from? And maybe outside of work, who is Pravarshan?
Okay. Yeah. Thanks again for hosting me and inviting me. So I grew up in Durban. I studied there. I went to DHS, and once I finished, I moved to Cape Town. I wanted to do BCom accounting. My sister, who was doing medicine, had already come to Cape Town, and she said, "No, I have to move to Cape Town." So she actually filled in my application for UCT for me, rather than UKZN. So I ended up at UCT, and I never regretted it at all. I've been in Cape Town for a total of 16 years now, and so almost the same time as I spent in Durban. And I feel like this is home. But so I studied business science, finance, accounting. Went on to do PGDA at UCT, and then on to KPMG, where I did articles with you. And the thing is, the reason I became a CA is my uncle Salvin. He was a CA. My parents were both lawyers, so you'd think I'd naturally go into law. But what actually happened was that I always saw my parents being stressed and my uncle being so much more chilled. And I was wondering, how could he be so relaxed while making money at the same time? I think it might just have been his personality, not necessarily that the work was easy. But yeah, he inspired me, and the more I read about what CAs do, I saw it not just necessarily as being an auditor. I saw it as a gateway into business. If you looked at the JSE at the time, there were more CEOs that were CAs than anything else, and I saw it as an entry point into the industry. Because you get a very good understanding of things like finance, accounting, risk management, etc. And so I pursued that route with the aim of the qualification of becoming a CA. While at KPMG, I started looking at stocks, saving a little bit, trying to apply some of the stuff we learned in finance to the real world. And really, I opened a share trading account with Standard Bank. It was just a fictitious one at first, just to try and play around, screen stocks, get ideas, etc. And then after I'd saved a little bit, I started investing myself. And I found that was something that I really enjoyed and wanted to pursue that as a career. So that's when someone recommended that I do a CFA, or do the CFA, try and get my charter. So I started studying towards that in between board exams. That was quite difficult, but managed to get through the 3 exams. I went into Investec Securities, which is actually the sell side after KPMG. Got a year's worth of experience there, and then was recruited by Foord Asset Management, where I've largely been for the last almost 10 years now. And in between, I took some time off to do my MBA. It was something that I wanted to do for a while. I applied in a lot of places, got rejected by a lot of places as well. But ultimately, I was lucky enough to get into the University of Oxford Saïd Business School. And I spent a year there doing my MBA before coming back to Foord. And, I returned as an analyst. And after a year or so, I was promoted to the head of equities. So that's largely my career path. I guess outside of work, I have quite a weird background in that I'm a football fan, a massive Man United fan, but at the same time, I'm a massive nerd as well. Video games, comic books, all that sort of stuff. You need to have your different interests that are not necessarily all linked to work, things that can take your mind away, and stimulate different parts of your brain. So like I'm interested in a lot of different things as well. And I have my 2 crazy Labradors, which I hope don't bark while we're on this call as well.
No, that gives us a good understanding of your personality. So that's great. I know it's been a few years now, but talk to us a little bit about, I mean, that transition from working as an audit trainee in an audit environment to working in an investment environment as an analyst. I mean, it's not even close to being the same. How did you manage that transition?
It's actually quite interesting because, you know, if you think back at our time at KPMG, we came from a student background into a professional environment, and you know, that kind of transition is not necessarily easy because, I mean, for one thing, as a student, you do manage your own time a lot more, whereas now your time is dictated by someone else. And for me, it's difficult as well. You know, there's also certain things where a place like KPMG and all the big 4 are very process driven. You know, timesheets, for example, were the bane of my existence, and I hated filling those types of things in. But you know, you adapt to that over time. You know, the way you approach certain things changes, and then moving from that type of environment, which was very process orientated, to moving into investments was almost a change back to having a lot more autonomy. Where you can manage your time a lot better. You know, you don't have anyone looking over your shoulder. You don't have to fill in timesheets, and that's something I enjoyed. When I moved to Foord in particular, I think one of the reasons I've spent so long there is that you know, they trusted me to take responsibility for myself and my own career. I was given a lot of responsibility early on. And you know, they provide you with guidance, but ultimately you are responsible for making your own decisions and building your career, and that's something that I quite enjoy as well. So you know, we try to not have a lot of processes and allow people the ability to find solutions to problems themselves. And so, you know, like we're not prescriptive in what we do, and I think that's the biggest benefit that I find at Foord, is that you know, you are left to your own devices, and you know, you take responsibility for it, but in terms of learning opportunities and growth opportunities, it's second to none.
If anybody's got any questions for Pravarshan about CFA, CA, or MBA, please put it in or anything else for that matter, please put it in the comments now. We'll deal with all the questions towards the end. So the sooner you put it in, we'll make sure we don't miss it. You mentioned that you spent time working at Foord, and then you took a break to do your MBA full time.
Yep.
Was your company on board with you taking a year off? And why did you decide to take why did you decide to do it full time, and why London?
Mm-hmm. So I guess the thing was that I had the idea in my head for a while that I wanted to do an MBA. I think it's very different to, you know, the CA route and your CFA, getting your CFA chart as well. It's multi-dimensional. It gives you exposure to other things that you didn't necessarily have. You know, things like strategy, operations, those sorts of things as well. And it's a lot more global in its outlook. So, you know, you meet a lot of people. I think in our class of 330 odd, the number of nationalities was crazy. You know, in my study group alone, I had someone from Thailand, someone from Egypt, the US, where else? China and Japan in my study group, and a South African as well. I mean, that's great exposure, and a lot of personal development comes from that as well, not just the textbook side of things. So that was the thinking about doing it. I wanted to build my network and potentially make a move to a different industry. So things that were interesting me were things like ed tech, fintech, etc. So it was something I was exploring. So it wasn't necessarily my intention to come back at the time. I wanted to leave my options open. So the company understood that. They wanted me to stay, so they offered to sponsor my MBA, provided that I signed a contract with them. I didn't want to do that because I felt it would be in bad faith to commit to it, and then if an opportunity came up, in one of those other spheres that I mentioned, and then I'd take that, then I'd have to renege on our agreement, and even if we pay them back, I felt that it would have been unfair on them, given that they treated me so well for the 5.5 years that I was there before that. So ultimately I didn't, but while I was doing my MBA, the head of research at the time, he was in constant contact with me. They wanted me back, and when you feel wanted by an organization, and they show a lot of faith in you, and they invested a lot in you, it was an easy decision to come back at the end of my MBA. So I had no hesitance in coming back to join the company as well.
Okay. You mentioned, so obviously you've done a CFA and you've done an MBA, but let's talk about them separately. So for people who are chartered accountants or pursuing the journey, what would you, if we talk, let's talk CFA. Would you recommend that other CAs also pursue CFA, and maybe what are the similarities and the differences?
Yeah, it's an interesting question. I think when you become a CA, especially if you go the auditing route and stuff like that, you get a lot better understanding of accounting, finance, risk management, and it's very process driven as well. I think the difficulty there is, especially if you go in the auditing route, is that a lot of your experience is driven by the clients that you have. And I was lucky that I had big clients like Nedbank and Investec Asset Management and those sorts of things. And there was a lot of learning opportunities for me there, and it helped me. I mean, if you look at it now, I cover banks, so I'm the analyst who covers Nedbank. I also look at some of the asset managers and wealth managers as well. And so that's I was lucky to do that. But if you're someone who was assigned to pension funds and you only had pension funds the whole time, I mean, you still learn from auditing a pension fund. But if you're stuck in that little niche, then it limits your learning opportunities. So I think that was one thing that whereas the CA qualification gets your foot in a lot of doors, and there's a lot of learning opportunities, depending on which audit firm you end up and which clients you end up on as well. It does restrict the scope for your learning and growth. With doing the CFA route, it's internationally recognized. I think that's the biggest thing. So if you go the CA route, while South African CAs are still held in quite high regard internationally, if you wanted to be a CA in like the US, you'd have to write some equivalency exams to get your CPA qualification or equivalence. Whereas with the CFA, you could work anywhere in investments in the world, and everyone, the qualification you don't need to make any additional changes to have that title. It's also like pretty much a gold standard for the industry, which is quite nice. So, if you want to be specifically in investments, that is the route to go. It gives you a lot of the basic fundamentals that you need to get into the industry to understand and to get started. Obviously, the cost is quite prohibitive for people. I think a lot of people want to do it, but it's expensive. It's very much self-taught as well. You write your 3 exams and you're likely working at the same time. So, there's no classes or anything like that. So a lot of the onus is on you for the learning. So it's not necessarily easy to do. It's expensive, it's time consuming. And you also have to work for 48 months before you actually get your qualification as well. So even if you complete the exams, you need qualifying work experience. So it's not an easy route to do, but I do think the benefits are there if you want to be in the asset management industry. So I think that's kind of the way I think about the CA route versus CFA. Now, in terms of CAs doing CFA, I think if you are a CA and you go into you actually do a CFA, it does help in that the accounting stuff is a lot easier for you. You can actually kind of skip that section out because you save time on it. But you will learn other things as well in terms of derivatives, a little bit more in terms of economics, etc. Financial modeling that you might not necessarily have come across in your audit days as well. So I think it is helpful. But if someone didn't have a finance background or an auditing or finance or accounting background, then going the CFA route, it starts from some of the basics and builds up. And I think the MBA is similar in that regard, that it doesn't presuppose that you have any knowledge of finance and accounting. So both the CFA and the MBA can help you bridge that gap into investments without having to go the CA route as well.
So basically, my understanding is if you're going into investments, whether it's equities or even venture capital or anything like that, then CFA is worth it. If you're not interested in investments, CFA is probably not worth the investment.
Yeah, I guess there's other routes that you could go which are not as restrictive, because I guess the question is that if you do your CFA, yes, you do learn a lot about finance, accounting, economics, etc. But if you want to go into another field, then people are going to say, well, why did you do that? Because it kind of makes it seem as if your mind was set on investments. So I think that's kind of the thing. Whereas an MBA, for example, is being more generalist, can actually give you a greater exposure to other things, like I said, about operations, strategy, etc. And you still get a bit of accounting and finance in it as well. So, if you're not going to be in investments, probably the MBA is the route to go. If you, if you want to move from one field to another. So you get people who are engineers who want to be potentially in investments. They can go either the route of being going the CFA route or doing an MBA. Certainly, that's what we have. One of our analysts who's covered resources for a long time. He's got a geology background, and he did an MBA before getting to asset management. So he could have done the CFA route as well, but he chose the MBA.
Good. So would you also recommend for other CAs that if they've got the CA qualification, that the MBA is worth it, and maybe other similarities and differences?
Yeah, it depends on ultimately where you want to go with your career as well. I think, especially now, from my understanding, the board exams have changed and the curriculum has changed, so that CAs get a much more well-rounded business sense than perhaps we had when we did ours, which I think stands them in good stead. We also came from the business science finance degree at UCT takes a lot of elements from the MBA courses as well. So, we were lucky in that we had a pretty well-rounded educational experience in the first place. But if you had a very narrow path, then the MBA could help you in terms of getting exposure to certain other things. But I think in terms of textbook learning, I don't think that's the main reason that one does an MBA. I think it's very much for the network, whether it's your fellow classmates, other alum, the faculty itself. It's the brand name that you get behind you. So that's why it's quite important to be very selective about which business schools you choose. And it's ultimately the experience you have while you're there. So, I mean, for me, choosing Oxford was, part of the reason was the university was ranked #1 in the world. The whole town is built around the university as well. Some of the buildings are 400 or 500 years old. It's quite a unique experience as well, and I think that plays into your mind about the choice of doing an MBA. So sorry, I actually didn't answer your questions earlier about why Oxford and why full-time. I think it was because it allows you to immerse yourself completely in it, and again, Oxford is a very unique place to go, and I thoroughly enjoyed living there for the year.
I mean, that gives us a good understanding. You mentioned earlier, you said you did your while you're doing your articles, I think while you were doing board 2, you were also doing your CFA. Is that correct?
Yeah, that's right.
And then you did your MBA 5 years later. Mm-hmm. Would you recommend that others do that, do it in that same order, or based off your experience, would you do it differently?
No, I think when you're in articles, so I did board 1, CFA 1, board 2, CFA 2, and then CFA 3 after that. It's a lot of sacrifice. It's not easy, right? So I think that's the thing, is that at least when you're in articles, you're still junior. The world doesn't revolve around you running the business, so there's less responsibility on you from that perspective. Plus, you can also accumulate leave to use for studying, which makes it easier as well. So I think that was the idea, was to use as many of the opportunities within articles to do that. Doing the MBA later, as I mentioned, was I'd been thinking about it for a while. But I don't know if you want to do all three. I don't know how many people want to do that, because part of the thing is my mother's always told me about the importance of education and continuing to better yourself and improve your knowledge and skill set. So I know a lot of people, when they write, they always say, oh, this is the last exam I'm ever going to write, and they're very happy about it. But for me, I've never really thought about that. I've always thought about, well, what am I missing in my skill set that would allow me to do something else? So, I wouldn't say that that's the path to follow. It's kind of unique to each person. What are you trying to achieve? What are you aiming for? What industries you want to go into? Look at your personal circumstances as well, because again, it's a lot of commitment in terms of time, effort, money. It's not easy as well. So I would say this is the path I've followed, some through design, some through circumstance. I wouldn't want to say to anyone that this is the way to do it, because everyone is unique.
That's interesting. But basically, what you're saying is you were studying CFA 3 while I was going to watch the World Cup games in I think I choose my one.
No, I also I also managed to catch some games, so it was okay. But yeah, no, it is difficult. Again, I think if I would, my wife did her MBA. She finished last year, and she did hers part-time at UCT over 2 years, and it's also very difficult to do that. She also does things at home, like she's responsible for certain things at home. So again, it's difficult to juggle all of those types of things. And from a practical experience, practical I guess perspective rather, it's not easy to manage all those sorts of things at the same time. So now I wouldn't also want to be overly ambitious and say, well, I'm going to have a full-time job and do an MBA and have other commitments outside of that as well, because also part of the MBA is doing things with your classmates outside of class, and also taking on other projects. Like I did a impact investing thing, I did an asset management workshop as well. Like all of those sorts of things, they add to your experience as well, but they are again time consuming. So if I were to try and work and do my MBA at the same time, I think it would have made it more difficult for me to get the full benefit out of it.
Okay. There's lots of questions flooding in, so I'm just going to switch over to see what some of the questions are. Let's just see. Ayanda just says that CFA is regarded as the toughest exam in the world. How was it from all the levels? I think you basically answered a little bit of that, unless you want to add a little bit more to that.
Yeah. I think I will. I must say, I think for me, doing CFA level 1, coming from the business science finance background, and also having done my first set of board exams, I think CFA level 1 was relatively easy, because again, you've covered the finance, the accounting, etc. It's more the time commitment to make sure you've covered everything. I think the one thing across all 3 levels to be aware of is that ethics is important, is imperative. So you can't actually pass the overall exam if you fail the ethics section, no matter how well you've done in the rest. And the ethics section can be a bit pedantic. It can be a bit tricky. So be wary of that. In terms of CFA level 2, in terms of the actual technical exam, I felt that was probably the hardest exam I wrote. And yet, ironically, I passed 1 and 2 first time, and I actually failed 3. And the learning that I took out of that was that it was a written exam, and I hadn't practiced enough. It had, levels 1 and 2 were multiple choice, and level 3 was multiple choice with the written component. And time management and exam technique were crucial to finishing that exam in time. And I didn't practice that enough. So while 2 may be the hardest technical exam, 3 is very much an exam that you need to spend time practicing. So that's kind of the my take on the 3 levels.
No, that's great advice. We've got a question from Lee. He says, "What do you think set you apart in your application for the Oxford MBA?"
Yeah. So it's a good question. I think when I did a lot of research, I spoke to a lot of people as well, and I think the one thing that came across quite strongly is that you need to have your unique story, and that's what you need to do in your exam, in your application. Sorry. So you write a lot of essays, and you have to tick a lot of boxes, etc. But ultimately, you need to tell your story and what makes you unique. And I guess it's not just necessarily for the MBA, but for even when you're applying for jobs, is that you need to understand what's unique about the institution. So whether it's the university, the business school, or an employer, you need to understand what's unique about yourself, and then you need to tell the story about how you fit together quite well. So from my perspective, I think it was a case of telling the story that this is where I'm coming from, this is where I'd like to go, this is what I'd like to learn in terms of getting exposure to certain things, edtech, fintech, international exposure to the different class, what I was hoping to get out of it. So there's nothing definitive that I could say, because it is a personal story. But I think that's the key ingredient, is that, like I said, you need to understand what makes you unique, what makes the school unique, and how that fits together. So I think do your research, speak to people, understand what you're trying to get out of it as well, and then tell that story.
Got a question from Nandani. Do you think you will be in equities in the future, or will you branch out into other asset classes, and why?
I guess the thing is, for me, I've never, fixed income is something that I've never really had that much interest in. And Nandini actually was at the Foord, she was at our VAC program as well. So, I think we're very much an equity focused house. So we do have multi-asset class funds that allows us to invest in things like commodities, gold, property, commodities like gold, property, those sorts of things. And I don't know necessarily. I like equities because I think there's such a great read through to so many different parts of like there's there's the economy feeding into it. There's there's the actual valuations. If I look at like fixed income, for example, you start off with like a reference rate and you build up a spread, and on top of it, and some of it just doesn't feel as tangible to me as it does with equities. And the argument, it doesn't speak to me. I mean, I guess it's kind of those things where for fixed income, you look at the balance sheet, and like I said, you have a reference rate that you build up your spread above it, right? Whereas with equities, maybe it's a case of false precision, but I can value an equity in multiple different ways. There's multiple considerations as well, and I get more comfort in terms of the way I look at it and the way I value something in equities rather than fixed income. Other than that, I mean, other asset classes, you could go the unlisted route as well, but when we were at Oxford, I did a due diligence on an edtech startup, and this is almost like you're approaching it from a venture capitalist point of view, and you try to apply things like your valuation methodologies that you would in equities to that, your normal DCFs, etc., multiples, whatever it is, and that you're actually ultimately thumb sucking it, because unlike listed equities, these things don't have numbers. There's so much uncertainty, etc., that ultimately what you're doing is you're backing the entrepreneur and the management team that are driving it. So it's a different skill set, and I enjoyed that to an extent. But again, I guess it's almost the auditor in me that I want something more tangible to base my decisions on, and with those types of things, venture capital, it's a little bit harder. You need to have a gut instinct about people, and that's something I might need to develop if I want to be in that field. So maybe that's just a couple of asset classes and the rationale, my reason for potentially being in them or not.
Okay, great. We've got another question from Lee. So we know he's considering an MBA. Would you recommend a local MBA program?
Yeah, so I mean, like I mentioned, my wife just did hers through UCT. It was very good to contrast the two. It was interesting because she has an analytical chemistry background. So if you're talking about that type of move, from one career to the other and getting exposure to subject matter that you've never had, it was quite interesting for her to go through that process. And I tried not to be involved because it was for her, not for me to do her homework for her. But she thoroughly enjoyed it. I looked at their finance project, for example, because she asked me some questions on it. But like that finance project that they had to do was actually harder than the equivalent project we did in Oxford. And I think it speaks to the quality of the local MBA here. And Mark Graham, for example, who taught us at UCT, also did the accounting component for them. And And Mark Graham, he taught us financial statement analysis, and that kind of piqued my interest in investments as well. And so I hold him in pretty high regard, and he taught them as well. And again, it speaks to the quality of the program and the lecturers and the people running it. So from that perspective, I think your basis for knowledge is very good. I think the two biggest detractors there would be that one, you're not getting the same exposure to international students. So whereas my class was 92% non-Brit, my wife's class was 88% South African. So it's a little bit more difficult to get that international exposure there. And then the second element is, as I mentioned, you need the branding behind you, and the University of Oxford has a very strong brand. So while UCT does have it's still well regarded. They dropped out of the FT rankings for, I think they're back in this year, but they dropped out a couple of years ago, and I think it's difficult to get into those rankings, and it detracts a little bit. So if you were looking at international opportunities, it does penalize you a bit from that perspective. But as I said, I think just based on my wife's experience and my interactions with her and her classmates, I can say that I think it is a good quality program, the UCT one.
And final question from the audience, tying into what you mentioned about the auditor in you. What are your thoughts on the investability of crypto?
Yeah, that was a question I was expecting to get, and ironically, when I've interacted with students, I haven't been getting that as often as I would have expected. Look, I've thought about it long and hard. I have a friend who works at Valor, and then one of my colleagues at Foord also, he invests in crypto. But I have a hard time getting my head around it, and I think it's to your point about I need something tangible in which to invest. And if I think about crypto, there's two ways of thinking about it, right? One is as a means of exchange, so a currency to buy and sell things, and the other as a safe haven asset, which is uncorrelated to certain things. Now, I mean, if I think of it as a means of exchange, it's very difficult to say, well, I'm going to go buy a pizza or buy a house for Bitcoin, and you pay for it now, and yet the valuation has fluctuated so much that you've either made a massive loss or a massive gain just by doing that. So I think with all the volatility, etc., it's difficult for me to see it as, and there's other issues as well, but it's very difficult for me to see it being as a means of exchange ultimately. So then the question becomes, okay, is it a safe haven asset? A lot of people refer to it as digital gold. I understand, the rationale behind it. There's no storage costs, there's transferability, etc. But ultimately, the way I think about it is, and I don't say that gold isn't it. We've grown up as being taught that gold is a safe haven asset, but industrial applications for gold is very limited. So ultimately, the value of gold is determined by, it's driven. The price is driven by fear and greed, depending on economic cycles, for example, and expectations for inflation and interest rates, etc. But ultimately, gold is only worth what someone else is willing to pay for it, right? There's no yield on gold, and it's similar with crypto as well. So if I were to say, well, I believe in crypto and everyone else believes in crypto, it's fine because someone else believes in it and willing to pay you for it, right? But if no one believed in it, then it's worthless because there's no application for it at all. And for me, I don't think that's a risk I would be willing to take. It's the greater fool theory. I need someone to believe in it and to believe that the price is higher than I believe the price is in order to sell it to them. If I contrast that to equities, for example, right, there's cash flows backing these things. Now, you could always debate that, well, not all stocks pay dividends, right? But then you don't necessarily have to be in that stock if it doesn't pay a dividend. But also it depends on what they're doing with the cash flow, right? So, I mean, Amazon doesn't pay a dividend, but they use the massive amount of cash flows that they have to continue to expand and invest in the business. So, again, there's something tangible about it. And ultimately, they should be paying dividends in time based on their own capital allocation decisions. So I guess, those are my thoughts on crypto. I don't, just because I don't invest in them, I'm not going to rag on people that do. it's the same reason people invest in gold as well. So those are my thoughts, but there's no right or wrong answer in it. The idea of it being uncorrelated to other assets, I do understand, but at the same time, we need time to see if that's really even a true statement, because things you think something's uncorrelated, but then actually what happens is if institutions are shifting between different asset classes, then it could actually become correlated with something else. So if people see it as gold and then it becomes a risk and a safe haven asset, then it might start to ebb and flow, similar to the prices could start moving along with economic cycles as well. But those are just very very high level thoughts.
And okay, that gives us a good understanding of where you stand, and I appreciate, especially the fact that you say you don't rag on people who do. To each their own, whichever way they decide to go. Those are the questions from the audience. Maybe just from the last one from my side is what's one piece of advice you would give your younger self?
One piece of advice it would probably be to watch my health a little bit better when I was younger. No, but jokes aside, I think it's advice I'd give a lot of people, and that's it's very similar to what I was saying about finding what's unique about you and the institution you're applying to. I think it's doing your research and understanding ultimately what you want to get out of something. I interview with a lot of students and people who want to potentially join our trainee analyst program, for example, and they say they're interested in something, but when you start to dig a little bit deeper, you see that it's not necessarily something that they've spent that much time thinking about and actually doing some research on. And I think that's important. So like I said, when I started becoming when I wanted to become a CA, I looked into it, but perhaps I should have looked a little bit more into it to understand really ultimately where I'm going. I know it's difficult when you're young to spend time thinking about these things in the long term, but I would say that maybe spend a little bit more time doing the research, talk to people. LinkedIn's a great source of knowledge because a lot of people out there are willing to talk to you if you just hit them up on LinkedIn and ask, send them a message, ask if you could chat to them. People like to talk about their careers, like to talk about their businesses, etc. And it's a great source of knowledge that you could use to better understand where you want to go, with your career as well. So I think that would kind of ultimately be my suggestion to my younger self. Spend a little bit more time doing your research in terms of certain things. Ultimately it's worked out well for me, but I know people who haven't spent that much time thinking about where they want to go, and you can drift a little bit, and there is a cost to that. There's an opportunity cost to spending too much time drifting from one thing to the other.
No, I think that's great advice. And from your side, any last few words or anything that we didn't discuss that you'd like the audience to know?
I guess I was just thinking, on the invite you mentioned what am I working on at the moment. So I thought I'd just mention a few things, because obviously now as head of equities, I've been doing things a little bit different to what I've been doing in the past. One thing is I've been working on a bit of ESG stuff, which actually ties into some of the things that I was looking at. I spent some time doing impact investing at Oxford. So that is, impact investing is different to ESG investing, both evolving fields, etc. I won't go into all the technicalities of it at the moment, but that's a nice growth area for us as well. There's a lot still to be done there. Our thing is that we don't want to just pay lip service and say we're doing ESG investing. We actually want it to be fully integrated into our process from a risk management perspective and a stock selection perspective. So that's something that I'm working on, that I'm enjoying. Also working on the training and recruitment side of things. So we've created a student VAC program, which I mentioned earlier, which we ran for the second year now, and next year is one I'm hoping we'll get even more applications. And then also a structured trainee analyst program. So we are looking for trainee analysts, and I think the industry doesn't do enough on that front in terms of training and development, etc. Marketing itself as an attractive place for people. It's investments is a great sphere to be in, because you learn a lot, and you can have an informed conversation about almost anything as a result. I think it benefited me in terms of being able to go into the MBA and not being intimidated by anyone, because I could I could discuss anything, almost anything, with some with something tangible behind my comments as well. So I think it is a great. The industry is actually a lot more attractive than people think, but we need to do more about and so that's ultimately what I'm trying to do as well, working with universities, working with bodies like ABSIP, for example. So yeah, I mean, if people are interested, you're more than welcome to go to our website and look at the trainee analyst program, look at the VAC program for next year, and we are looking for people who are passionate about investments. So if you are interested in investments, you're more than welcome to contact us.
So VAC work, trainee analyst program. If you're interested in investments, give that a look.
Yeah, thanks.
Just a reminder to everyone, the show is live on YouTube and will be available on podcast tomorrow. If you're watching on YouTube or listening on the podcast and you feel that this has added value, don't forget to like and subscribe so that you get automatically notified the next time an episode comes out. We're still having our weekly discussion on Clubhouse about business and investing in South Africa. That's every Monday at 5 p.m. Central African time. Contact me if you need a Clubhouse invite. Pravarshan, thank you so much for your time.
Thanks very much, Uwais, and thanks for everyone who participated and listened in. Take it. Cheers.
Thanks for joining us for another episode of Tooways to Skin a Cat, powered by Murugasen. Goodbye.